there's a prophylactic function for government on this with respect to insured mortgages, and it's our job to try to be ahead of things and act in a measured way, listening to the market, and I have been listening to the market, and quite frankly, I don't like what I hear, particularly in the condo market.
That was Finance Minister Jim Flaherty saying that, yes, he's keeping a close eye on the Toronto condo market. Joining us for his take, Brad Lamb, President and Broker at Brad J. Lamb Realty. Good to have you with us.
Nice to be here.
I describe you as the condo king. I don't want to get into whether or not there's a bubble or not, because clearly you don't think so, otherwise you wouldn't be in the line of work you're in today. But what about the mortgage rules? What are the implications for you?
Well, we have various sub-markets in Toronto. We have a new condo market, we have the resale condo market, and then we have the housing market, and they all affect each other, right? So the change to the amortization rate from 30 to 25 years won't affect the single-family home market at all. It will affect the condominium market in that, that's the affordable market for people to get into buy a first home in Toronto. Mm-hmm. And by changing, the average condo sells in Toronto for about $350,000. A starter condo is around $300,000. This change adds about, $1,800 a year to the cost of owning a home. And it means that a buyer needs about an extra $3,000 to $4,000 a year to qualify to buy that home. So it's not a huge jump to go from 30 to 25. What it means is I think people will put off a buying decision if they're on the fringe, to the very basic, if their GDS ratio is at the very level that the highest it could be, and if they have the basic equity, it may make them wait 6 months to a year to get in.
And I can imagine that pushes people back into the rental market.
Exactly.
But many of the condos, for those who already have a condo that's already been built, many of those units are rental units. What does that mean for you?
Yeah, well, I would say that in the last 10 years, fully half of the condos that have been built in Toronto have been built as apartment units. We haven't had any real apartment unit industry in Toronto. No new apartment buildings have been built in 30 or 40 years. So the condominium market has sort of taken that slack up. So for us, 50% of our buyers are investors in Toronto today.
Now, if you are an investor in the condo market, you're dealing with a whole different financial world than you would be if you were a young Canadian making $52,000 or so looking to get an entry-level condo. Mm-hmm. Does this move the needle at all on demand from the investment side of things, considering where you are in your life if you are buying a condo for investment purposes?
Well, the rules for buying, first of all, the Bank of Canada and Flaherty have changed, behind the scenes have been working very hard to change the lending rules that investors would face. So regardless of what happened today, for the last 4 or 5 months, it's been more difficult to get financing as an investor or a first-time buyer or any buyer in Toronto. Right. They have done their visits and done the work to make sure that that's taken place. With respect to investors, though, right now you have to put 20% down to avoid CMHC. But the banks on their own, even though that's the rule with CMHC, the banks on their own have pushed it in some cases to 35% down. Or that if you go 20% down as an investor, you need to get CMHC insurance. So the rules, despite what the finance minister has done, the banks can make their own rules and make it more difficult. And they have already. So a lot of what's happened is already in the market.
The whole issue of someone who maybe had eyes bigger than their wallet, as the case may be in the condo market, now coming up for renewal. Maybe they did the 40-year 3 years back or so. Maybe it's a 35, maybe it's a 30. Regardless, you're now coming due. And you can't afford to continue to make those payments on that shorter amortization period. You've got to sell. How big of an issue is that to you, and what does lower prices for condos mean when you're trying to sell new condos?
I don't think that's really an issue. I actually heard the earlier broadcast, and I think that's a very small part of the population. If you bought 5 years ago, you've hit the gold mine. Properties have gone up 30 or 40% in 5 years.
That only counts though when you sell, you know what I mean?
True enough, but I don't see, when you renew a mortgage, the bank doesn't make you re-qualify for the mortgage. So it might mean that, and also, over 5 years, it's very likely that you've made more money. That's certainly the expectation when banks lend you money, that your salary will increase. Mm-hmm. I think it's a very small part of the market that's going to have to sell because of the amortization rule change. I don't think it's going to be a material issue, really.
So long term, this is actually a good thing. It weeds out on the fringes those who couldn't afford in the first place.
Yeah, it's a great thing. I think making buying a little bit more difficult is good for the overall Canadian marketplace.
Well, Brad, we appreciate your insight. Thank you for coming in.
Oh, you're welcome.
Brad Lamb, President and Broker at Brad J. Lamb Realty. If you've got a comment on this or anything else you see on the program,